got Nooresh Merani joining in on the show. Nooresh, good to have you on board. Let's begin by discussing the overall market setup. The fact that it's been the worst week since March on Wall Street, the kind of handover that we've got isn't too encouraging, and there's already been 2 straight weeks of a sell-off for the equity markets. Do you think that the reprieve that we witnessed on Friday's trading session can continue into today's trade?
So I would expect again another flat day going forward, and overall we are now getting into a new range. The earlier range was 19,500 to 20,000. Now that has shifted base towards 19,300 to say 19,700, 800 on the upper end. And now we are in a slow drift on the downside, wherein we'll continue in this band. Overall, the momentum has weakened on the index, but the broader market continues to remain fine. We've hit more all-time highs on the small cap and the mid cap indices over the last 2 weeks than on the Nifty and the Bank Nifty. So for now, we need to wait for at least one or two of the heavyweights to actually take leadership to call a move on the upside. So till then, we would stick in this range of 19,300 to 700. Focus more on the broader end, look out for new sectoral rotations. And overall time to be more alert on the trades because it was a one-way rally which we had from 17,000 levels. And now one has to be more careful in terms of selection of stocks. It may not be a clean move going forward. There could be a lot of whipsaws. We'll see a one day up, one day down moves continue for the next, say, a week or two. So for now, being cautious on the markets in terms of momentum.
I wanted to also get in your view then, Nooresh, on the Nifty Bank Index, because that too came under acute pressure. And I know you spoke about now waiting for leadership in the market for the next move to emerge. Do you think that that would largely be from the banking space? And what is it that you're watching for by way of levels on the Nifty Bank?
So on the Bank Nifty, the problem is if we look at the top heavyweights, so we have HDFC Bank, which is a 25%, no clear trend here, just bouncing back from 1600, 1630 levels all the time. The next one is ICICI Bank, which did not see a follow-up move after the breakout. SBI is another one which could not cross that 620 mark, and we are back onto the lower end of the range. The only one starting to make a recovery is Kotak Mahindra Bank, and the positive ones are more on the small cap and the banking space. Small cap banking space. So for now, expecting the range bound moves to continue, we may get into a 800,000 pointer range from the current prices and stick there for some time before we start taking leadership in at least HDFC or ICICI.
Let's get in those top recommendations. Nooresh, what is it that you're looking at on the charts then? I assume it's just large caps.
So it's a mix of stocks, but in the large caps only. First is about IndusInd Bank, which saw a strong move on Friday. Good recovery, relative strength, and the stock is on a longer term basis available at the same prices where it was in Feb to March of 2020. So the stock has seen no re-rating or say a return from the point of pre-COVID till now. Most of the banking space, the large cap banking space has done well. And the stock has consolidated well around the 1350, 1400 resistance zones. It has spent quite a lot of time here and now could be setting up for the next leg of the move, which could take it towards 1550 plus levels in the short term and even higher in the medium term, keeping a stop loss at 1360. Second is a buy on ONGC. Now, this is a stock which has underperformed on multiple time frames, whether it is 2 years, 5 years, 10 years, 15 years. The stock has done nothing. But over the last 2 years, the formation is a cup and handle formation, which has a breakout point at 175, 180. On a dividend adjusted basis, the stock would be at a 5-year high. So if it can sustain above the 175, 180 mark, that would be a major trend change for the stock. So preempting that possibility of a longer term trend change here, and also the fact that oil prices have now bottomed out and trying to make a move on the upside. So the base has shifted higher, which generally is a positive criteria for ONGC. Expecting this to break out going forward. A buy at current levels as well as on dips, stop loss at 165, an initial target price of 190.